All right, welcome back for the episode of Carnivore Trades. Today is Friday, November 4th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Two more winners in the books today, by the way. One of them on SLV, which we will talk about in a few minutes. Another one taken in just a few hours. We did short the almighty Tesla, and that played out to our first target in just a few hours, right off that 225 level. So great way to close out the week. Love making gains on Fridays and Mondays. Great way to end the week out there. By the way, if you want to get in on it, pretty soon, just a reminder, the price of the courses will be going up. So the Cycles course and the Carnivore Essentials Methodology course will be going up. So get in on that. I'll probably do that, I would say, around the middle of the month. So if you're planning on getting in on that, I would do it now. Anyways, without that out of the way, pretty much of a whipsaw day here for the market. So spiders did finish up 1.45% on the day. Nasdaq up 1.6 and the Dow up 1.3 here. So really all over the place. We gapped up, sold off. We rallied up into that 10-minute 100 moving average. And then we sold off and kind of like put in this little, almost kind of a bear base here at the bottom. And obviously we squeezed up towards the end of the day. That did not play out. Bottom line here is the 260 level on the triple Qs was defended. And that's the level that I've been, well, not keying off lately, but really the last couple of days. And on the CPI day, again, that is the low going back to September 2020. And that was the level that was defended on the CPI day on October 13th. So that level to me is critical. And bottom line, the bulls live to fight another day. They held that. I thought they would have had another little run. I tweeted that out. I said maybe they'll push it back below here, or back below that 260 level again. They kind of did. I thought we would maybe test like 258, and then I thought we would get a fake breakout, or a fake breakdown rather. It kind of happened anyway. We just never really got that full fake break. But either way, you saw some squeezing going on to the close. And so a really big whipsaw, a really choppy day here. And they saved it for now. They saved it for the end of the week. But there's too much technical damage done, if you ask me. And that really started on Wednesday on the FOMC day. But even going back to today, just take a look at the 4-hour. And by the way, we did back test that head and shoulders neckline. So we got a bid off of that. So that's, what we'll call fair is fair. But here, there's a pretty good rejection off that 20 moving average there on the 4-hour. And right now, I mean, yeah, we're still kind of, we had a nice reversal here, but this is still kind of a bear base right now. The last 2 days, if this continues sideways into the election or slightly higher, that's still a bear base. You had a lot of technical damage with this breakdown candle. Additionally, more importantly, which I mentioned really the last day or two, is even with today's rally, that's a clear-cut rejection off of the 20-week moving average. So that is not a sign of strength. That's the fastest moving average that I follow. I know some of you guys use 8 and 12 and stuff like that, but the 20 is a very important one. It's a faster moving average, and we got a rejection off of that, and we closed near the lows of last week's opening candle. So not a good look. Now, they saved the engulfing reversal by the end of the week, but I mean, that's a consolation prize. That's not something to write home about here. Another thing, too, close below the 50-day moving average. And we had a bounce. We had a chance today, even outside of the little rally we had later, we had a chance in the morning. We could have put in a higher low and then rallied up to maybe the 200, the 3820 area on the ES, and that would have gotten us above that 50 moving average. So they had a chance to close us up here, but they couldn't do it. And they had a chance Wednesday to blast us off. I mean, obviously, you saw the candle. We all saw it. They had a chance to push us up. And now you might say, well, the contrarian play, they want to get all the bears on board. I don't think so. I mean, they had a chance. Like they had a chance to slam dunk it on Wednesday. Why wouldn't they do it? They don't need more bears on board. If they just break that 391 level, the bears will cover. Trust me. You don't need the bears at that point. You don't need a retrace or a higher low here. And additionally, again, just to flip over here, look at the AAII that came out yesterday. That's been increasing on the bull side. So it's not like and bears are decreasing. I mean, it went from 55, 56 down to 45, down to 33. So it's not like the bears are upticking here. I mean, we have the pretty neutral tape and the bulls are actually gaining ground despite this pullback. And personally, this is anecdotal, but I mean, I'm seeing kind of like no fear here from some of the bulls that, I follow some people who are bullish on Twitter. They're like, this is, it's a fake out, just buy the dip, etc. And we're kind of seeing that in the VIX as well. We talked about this the other day. Yesterday, actually, XLE has a lot to do with this. So XLE continuing to be green, when there's a sector that's green, the VIX is going to be red, or it's going to be up fractionally, even if the rest of the market is down. The semiconductors were up nicely today. So that's, the VIX was red all day long, even when the market was, at the lows. But this is starting to get real cheap, guys. Like volatility, think about it. We have an election in 2 days, 2 trading days. And then 2 days after that, we have CPI. And this is down from 34 to 24 in the last, couple of weeks. You also have this trend line that's upsloping there as well. Usually the VIX rises into the election, and then you have a sell the news. We're falling into the election. So that's something that definitely catches my eye here. And I mean, if you're looking for, a low risk, I think a low risk trade, I mean, if we're down here on the VIX Monday, I mean, what do you got to lose by taking a shot at it? I mean, what's it going to do? Go down to 22? I mean, there's a gap down here, but you could always stop out of the trend line and then reassess it. Anyways, just to throw it out there, little strange here to see the VIX getting hit as hard as it is. Usually when the market's getting beat up and you have like a XLE or XLF or, the semis being up, the VIX won't be, super green, but it won't be selling off is what I'm trying to say. You'll see like a base, it does these kind of base patterns or, kind of holds up and then it breaks out. This is just kind of going down. So definitely a little bit of a strange thing here. Definitely we'll be keeping an eye on that onto Monday. Let's take a look at the rest of the market here. So triple Qs, again, we talked about the 260 level. Bottom line is they held that by the end of the week. The weekly here, not a really good look. I mean, this is just not a pattern of strength below all 4 major moving averages on a weekly close. So not a good sign of strength, or not a good sign of anything really for the triple Qs. Again, lots of damage here. Microsoft making new lows this week. Google, we talked about this. It probably would get a relief bounce today. It did, but 1, 2, 3 down yesterday. Tesla engulfing reversal on the daily. Again, I am short Tesla, full disclosure. And you got a weekly bear flag there. So with a rejection of that level of resistance there. So not a lot of strength here from tech. It's really energy holding up the market right now. But again, that 260 level, I think will come into play next week. So I will definitely be watching that and I will keep you guys appraised. As far as the spiders, I think it's really all about 370, which again, that's going to kind of coincide with the 260 area on the SPY. That's really kind of my line in the sand. If we break that, you're probably headed right down to 360. And then of course you have the year-to-date low there on 1013. On the upside, you really got to get above that 50 moving average, and then you have a fighter's chance of 390, but I still have pretty good resistance around 382, 383 on the spiders, at least for an intraday level, and it's pretty good resistance as well. So just keep that in mind there. Flipping over here to the semis, we talked about those a little bit. Again, it's a positive here for the market to see the semis up. I'll never not say that. So up 4.65%. And it's not like it was fractionally higher. It was up all day long. The semis gapped up, and even at the lows of the day, they held up. So that was kind of your sign that tech probably wasn't going to break down, and they probably weren't going to break that 260 level. So you got to respect the strength in the semis here. But again, this is just one thing. It's not going to negate all the other things out there. It's not going to negate all the technical damage. It's not going to negate the weakness in FANG. So just be aware of that. But semis showing a little bit of strength. So maybe this market can hold up a little bit more next week. IGV, on the other hand, down another 1.5%. You're almost at double bottom here. We're almost at new lows. And again, I've said this plenty times in the past, that's a really, really strong weekly bear base. You back tested the head and shoulders neckline this week, and essentially the same thing with that 20 moving average. And that's a pretty good rejection. I mean, like, take a look at where we closed last week and where we opened last week and where we closed this week. So that's almost a 52-week, that is a 52-week closing low. So 241.77, and the previous one is 242.05. So that's a new 52-week closing low for cloud software. Not a good look here, and not something I'd want to see. I mean, if you're going to call a bottom in the market, why isn't the cloud software should be one of the leaders here? So just keep that in mind. Dow transports are holding up as well. So here's another small positive, up 2% on the day. Again, still kind of back inside of this trend line. of this kind of flag pattern, and it's holding up okay. You held that 20 and 50 by the end of the week. The one thing I would caution here is you close right on that 20. So no definitive move here. You know, I would have liked to have seen a secondary close above the 20-week moving average. You did have an inside hammer, so that's okay, but you're still inside of this big sell bar here. And again, you're coming up into stiff resistance around 14,000, if you ask me, and you still have some at 13.5, which is basically where we closed the week. But Dow Transport's a little bit more of a neutral, and I'll take that as a slight positive for the market here. As far as interest rates, so the 2-year, lo and behold, had a green day for once. So it was up 7 basis points, and it was able to scratch out a little bit of a gain. The yield curves did come in, not flattened. They tightened a little bit. That's the word I was looking for. So you can see 2s and 10s here down to only 49 basis points inverted. And that tail is still there yesterday. And I believe, from what I've gathered, it's only on TradingView. So won't take it too much. If I got it on TradingView and if I'd had it on a bunch of other brokers, then I would be very concerned because a 91 basis point inversion would be insane. But it looks like that's a full fake print. I don't think that will necessarily play out, although it could. But for what it's worth, we'll respect it. 3-month 10-year, again, was higher today, so that did back off a little bit. You are now officially not inverted, although it's basically there. And then the 5s and 30s and 10s and 30s also backed off a little bit. So again, a small positive here in the interest rate department. 10-year, let's just use the TNX, still was higher today, as was the 30-year, so TLT took a little bit of a hit. Another thing that's a little bit of a concern here, despite, again, 1 day of the yield curve backing off is not make a trend here. And you just look at high yield debt. You had a nice surge last week, but we reversed a lot of those gains this week. And again, another chart here with a 20-week moving average rejection. So not a good look there for high yield debt, and definitely keep an eye on this as well. You can also make a case, again, these kind of channels are really good things to look at. But you've got kind of a bear flag there on the weekly. So we'll keep an eye on that going into next week. So anyways, XHB, let's get into that. Again, no change here. It popped up today, but that is still a really good weekly bear base. Keep that in mind moving forward. It's not a pattern of strength. Same thing with ITB. You closed right on that 200-week moving average. Again, still a weekly inside bar until proven otherwise. VNQ, again, holding up okay, so up 1.37. You still have the potential to hit an inverse head and shoulders here. It hasn't triggered yet, so don't get excited. Don't jump on it. Wait for it to trigger. But even if it does, you got to be careful because, weekly, you still have resistance here. I want to see a close. I want to see a weekly close above this area and, above that neckline on the weekly and daily. So if you get a weekly close above that, that would really kind of solidify it to me. I don't trust this thing. It's too weak right now for any sort of daily chart pattern. You do have the 50 moving average kind of coinciding, so that would be a sign of strength if it could get up there. But again, just be careful with this and be careful with any longs currently. XLF financials, this isn't a terrible pattern, all things considered. You had a nice move off the lows. My problem with the financials right now is I have to think that a lot of this is just fool's gold here. The yield curve, the 2 and 10 has been inverted for how many months now? And we have inversions in the other yields as well, kind of on and off with some of them. But, a lot of people say the most important is 3-month 10-year. That's been inverted a couple times here. This is going to hit their balance sheets eventually. So they're holding up now, specifically broker dealers. Again, a new high here today, or at least a very close 473.83 to 473.09. Yeah, so a new high. So you did make a technical higher high. It's a little overbought here. They're holding up well. I can't say anything bad about them right now, except that this is a ton of resistance up here, and you're overbought going into it. But again, it's just a matter of time before those yield curves really start to hit these balance sheets. Now, broker dealers may hold up a little bit better because they make money off of the volatility, but it's gonna filter out to everything. This volatility is not good for the market, and it's not good for financials. Anyways, so let's move on here to energy, crude here. So that is a trigger officially. That is an inverse head and shoulder trigger on crude. You also closed just above that 100 moving average. So a little bit of a sign of strength here. I know it's a trigger, and it's a weekly close, so you got to respect that. But I'm not in the camp that it's ready to break yet. Believe it or not, I still think there's too much resistance up here around that 95 area. So I think it has to do some more backing and filling. Now, I could be wrong. I have been saying for the last month, I think crude bottoms before the election. Maybe this is it. Maybe this is making its move right now. It certainly could be. What I'd ask for you guys to do is please don't chase it. Let it give you a bull flag. Let it give you a pullback. And then I don't have a problem with it if you want to jump on. But don't chase it up here. There's still a lot of resistance up here. And trust me, I'm not saying that just to say it. Like there's a lot up there. So who knows? It could be making its move now. I still think there's a chance it has one more correction in it. But nice little week there for crude, and it's holding up really well. Again, the economic data this morning obviously really helping it out there. So XLE gapped up today. Didn't quite get to double top. We do have Oxy's earnings on the same day as election day, so that's probably going to be a bit of a shit show here for XLE. I'm sure there's going to be lots of volatility. But again, I think this is still pretty overbought. Yes, you had a decent little kind of sloppy consolidation there. So, maybe it can pierce double top, but I still think it's due for a bit of a correction. You might get a blow off move, who knows, on Oxy earnings. So that could be kind of a catalyst there for a reversal. I still think XLE does need to correct, though. It's getting really extended. Now, XOP, again, I told you guys I like this pattern better, and you did technically have a breakout here. But the problem I have with this candle is this is not really, this isn't what I look for on a breakout. I want to see, excuse me, a gap or an even open and then a close near the highs, not a gap and then a fade and then kind of a hanging man candle. So I'm not convinced of this breakout. You did close above this pivot high on a weekly basis, and we don't need this trend line anymore. So let's get rid of that. You got above this on a weekly basis, but you're still below. I'll get it exact so we can get it there at 157.30. So we're still inside of that red bar. I would have felt a lot better if we closed above that. If we closed above that today, then I would say, yeah, you got to call a spade a spade. It's on its way. But a little bit of a red flag there, so just be careful with XOP here. I still like it long term, but again, red flag here. OIH, same thing. Nice pop, but a spinning top doji kind of going into double top. I don't like that setup, especially considering how overbought you are right now. So be careful with these energy names here. They need to correct. They need to pull back. Do not chase them. For those of you who haven't been following me for very long, ask anybody who has. I was telling you guys all throughout the earlier this year, don't chase OIH, don't chase XOP, don't chase Chevron. You'll get a chance to buy them. And there was people FOMOing in up at the top here, and they became bag holders. Now, yeah, they might be break even now, but if they had bought down here, they'd be up 50%. So just throwing that out there for everybody. Anyways, Nat Gas here continues to grind my gears a little bit. I had a chance. We had this long. We did make money on it, so I can't be too mad. But this was a classic shakeout candle, so we got stopped out on the second half. It happens to everybody, is what it is. We had a nice little bull pennant here and a nice push up higher today. A lot of this move came in really the afternoon. So as soon as we got above 620, it really just started to surge. But Nat Gas holding up well. There's still a ton of resistance up here, believe it or not. We did get to... Yeah, it looks like, we got to gap fill, so 6476, and the high today was 651. So we filled that gap now. But this is still a lot of resistance here. This is about a month of consolidation, and we've really only consolidated here for not even a full week, really, like a week and a half. So this can stall out here at that 200. I still like it on a dip buy, though. So we haven't missed a move. Again, don't chase it. Let it give you a pattern. And generally, that's going to reward you in the long run. Anyways, dollar index took a big hit today, so that helped keep the markets buoyant, down 2% on the day. And again, that upper trend line has worked out really well, hasn't it? So we put that on there yesterday, and that really kind of told the story. You did close the week below the 50 moving average. But again, technically speaking, this is still a bullish inside bar on the weekly, and you're not even near the 20 moving average. So I would expect this bottom trend line to be support. You also have the 100 MA, which hasn't been touched in a long time. So usually the first hit after an extended period is going to be support, especially if you come from an extended place. It also coincides with this previous support level. So we'll be on watch for that next week. We'll see what we get here. But that's really kind of the story of the dollar right now. No technical damage. Yes, it's a big sell-off. But just like last week, yes, we had a good sell-off for 2 days. But really, in the big picture, there's no technical damage so far in the dollar index. All right, precious metals, big story of the day. You thought I forgot about precious metals, didn't you? So gold here up 3.3%. Big move for gold. Gold moves 1% in a day. It's usually a big move. But getting above that 50 moving average, in my opinion, this is not the move. It's not ready to break out yet. I still have gold penciled in for one more dump, but it's a nice little reversal. And you also had GDX. Nice pop, up 10%. GDX, 10% gain. GDXJ, over 10%. Look at the silver miners. Yeah, SILJ, 9.5. SIL, 8, yeah, over 8.5. So nice move. And you see the positive correlation here with the rock star of the day, silver, up 7.6%. Still positively correlated, but I've been telling you guys, silver is stronger. It's in better shape. You've got higher lows versus equal lows or lower lows on gold. So they still have a positive correlation, but silver's outperforming on the up moves and it's outperforming on the down moves. It's not selling off as much and it's rallying harder. But we can still have a sell-off in gold, believe it or not, and silver can still hold up and still hold the year-to-date lows. So I still believe that is the case. I am still bullish silver. We did take some profits on SLV today. A really nice gain on that. And I'm looking for more. I do think this wants to get up to 2250 here at some point. Maybe it needs to do some backing and filling. You got that 200 moving average, a double top there. But silver is holding up really well. And again, the miners are still leading both the metals. So when it's time to get in, it's going to be time to get in. So anyway, stand by for that. Platinum wasn't up as much. Yeah, this is actually getting, it looks like it got a nice bid here in the last hour or so. Yeah, forgive me, because I saw this about an hour ago and it was still below the 200 moving average. So nice little bid there in the last hour for platinum. You see the bullish inside bar, power bar, 1, 2, 3, 4, 5, 6. Nice pop there on the 7th. And again, this is poised for that 1,000 handle, maybe even a little overshoot here into 10, 1015, 1020. So nice pop there for platinum. I love it here as well. I wish I owned some of it because I definitely missed the move. I had the order open right down here. And it took off on us, but we've traded it twice already this year for nice gains. And then another rock star today. Actually, I misspoke. Copper was the rock star today, not silver. 8%. Guys, 8% for copper in one day is insane. Like, that's ridiculous. This is a huge industrial metal. Like, it should not be moving like this. And if you looked at the weekly, right, this would look like a normal weekly candle. Like, yeah, it's a breakout candle, but it's like a normal candle. But when you look at it on the daily, it's like, wow, all of that move came on Friday. Huge move on copper. Jobs number, really problematic and really giving a tailwind to commodities here. Another thing that I said recently in the last couple of months is that if the dollar falls, you're going to see a rejoice from the equity markets, but then they're going to start to freak out when they realize that that's a tailwind for commodities. So metals really liking the move today, crude liking the move, nat gas. I haven't really looked at the softs that much. Yeah, wheat's reasonably higher. Soy is up. Let's see, corn. Yeah, corn up a little bit. But those hard commodities really liking that move here. Big move for copper on the weekly. This has legs to 380 here in the near term. Anyways, I'm getting a little long-winded here. Let's cover Bitcoin really quick. Bitcoin was also up today. So that little micro inside bar did end up playing out. We got a nice move up over 4%. So almost 4.5% in there on Bitcoin and a higher high. So again, to reiterate, short-term target here is about 22.5. You got that pivot there, and then you got a lot of sell action just above that. So I do think it stalls out there. Maybe you can overshoot to 23, but that's where I'd expect it to go in the near term. Ether also holding up well. It's stalled out at the 200 moving average, but I think this is minor. It can get through that. We've consolidated long enough beneath it. So, you know, maybe it does a little bit more backing and filling, but this is okay up to 1800, maybe even a little bit higher, especially if it does more consolidation. But I think this is in good shape here as well. Doge continuing to back off here. Had a nice squeeze last week. Everything else is getting a nice bid too. Polkadot up 8 3/4. Litecoin up 10% today. You can see the whole thing's green here. XRP, nice bid, 9%. Solana, Cardano, all those good ones. So crypto having a nice little pop here, and we'll respect that for now. Anyways, back to the spiders. Yeah, nice little squeeze here off the lows. Dollar taking a hit. That's helping out the commodities. I don't think this is anything more than a little short squeeze that we saw in the final hour or so of the day. And again, I do think that 260 level on the Qs comes back into place sooner than you think. And really, I maintain my targets here probably by end of the year, at least not Q1 of 2023, 230 triple Qs and at least 340 on the SPY. Anyways, guys, going to wrap it up here. You guys take care. Have a great weekend. I'll talk to you guys all next week.